5th. As we always do, we want to zoom out into the monthly, and we can see really no change here. Monthly continues to be one time framing higher. We are +4 on the monthly right now. Only thing that would change it would be a trade below the previous close, which would be 51.0375. So the odds of that, not impossible, but not great at this moment. We still do have a week left. So just remember it is a short week because we end on Thursday this week, which would be the 28th. And that'll be the end of the month. So it's a short week this week for the holiday. Switching over here to the weekly, we can see that last week's range closed above the previous high, giving us a +4 on the weekly. So we definitely want to be monitoring that close on the +4 on the weekly, which is 52.93 quarter. You can see the market currently trading below that right now. And that's why there's kind of an increased chance of liquidation here. So you want to be careful on the long side until we get back above that 52.93 quarter. Right, because it's a weekly. Definitely want to be watching this previous week's high as well, but honestly, it might not be that important, but something to pay attention to on this way down, and that is that 52.4675. So should we get a continued liquidation break from where we're trading right now, 76, probably the next target they're going to be that 52.64. So probably go ahead and move this bad boy. Switching over here to the daily, you can see on Friday was a -4 day. And this would be telling us that we want to make sure that we're staying short below the previous day's close. Should we climb above that previous day's close, then there is probably going to be increased chance of short covering, and we want to be going with that. But as we can see right now, we are trading below it, 75. Not that far, 76 below it, but going to be opening up on a gap, as well as Friday's low was 52.89. So gap rolls are going to be in place. So definitely going to be looking for that short side today to start. And it's built on momentum, as well as momentum traders have taken over on Friday and pushed the market down to a -4. So this was an untouched settle that we had. We could go ahead and erase it. Friday's settle was 52.93 quarter. As we could see, a little review from Friday, market kind of just liquidated down and then basically traded sideways, unable to find buyers, leaves behind a mechanical high, and then trades down to the low, finishing at the lower end of the range. Globex pretty much picked up where Friday left off, and we have some continued liquidation here in the overnight session, trading back into the range from 320. So one thing we definitely want to be paying attention to today is obviously we're at -4, we're on that gap. So that's really what we're going to be going to look for, is basically, well, let's go ahead and mark it in red, I guess. And really it's back to the settle, even though it would be a gap fill, but if it can't get above the settle, that's really kind of where the break point is at. So right, fail to take Oh my god, no. Oh Jesus. After all that. Well, I'm not gonna write it again. That's just fucking annoying. But basically, you get the point, right? You can pretty much sell out of this area anywhere you want, right? It's just a sell side. You're looking for that continuation down into these single prints. Now, if above that, then you'd be looking for longs, and this is kind of that rare case where we really do have a line in the sand, and we'd be looking to clean up these weak references and then head towards that prior day's high. Um, but this is really the thing. I think you could really just kind of sell all these rallies until we get above the previous day's settle. And if we can't, then pretty much sell side should be good to go for the entire day, I imagine. If it does take the settle, then it's going to bring me right off of the short side onto the long side. It's a rare case that I don't think there's really going to be a chop zone, but that's kind of what one of these rare cases happens today. But other than that, that is pretty much it. If you look on a larger scale, like if we check the COT report, and I merge these two profiles together on the COT, but you can see this is the last two COTs combined together. They really didn't do anything. That's why I merged them together. The most previous one was inside anyways. And we get this short covering continuation here. We're going to see this P shape. And then now the market breaking right down to 78. So we're going to have this kind of gap above. And I think continuation below that 60 or acceptance below that 60 really starts to... and here's the report from last night. So this is in the Discord. But below that 68 level, if we find acceptance below it, then there's decent odds that the market's going to trade back down. And I think probably towards that 52.33 level as a target to the downside. So basically back to the previous COTS point of control, where you see for the most part, you do have a little bit of short building inside here, but a lot of this was short covering, especially in this last bit. This move up here was a lot of it was short covering. So I just imagine that's what caused this continuation. You're talking about hundreds of thousands of contracts. So really acceptance back below would be like a break above balance and fail. And then we would be looking for acceptance back in, and that brings us down like that 52 area. But yeah, other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan. And I will see you guys tomorrow.